On a normal news day, this would have been the lead story for sure, because again, this is another sign of the complete transformation of the chip sector that we've been talking about so much recently. Nvidia is officially going to buy ARM from SoftBank in a $40 billion deal. Nvidia says it will keep ARM's headquarters in the UK and will actually expand R&D facilities there. Oh, and they intend to keep ARM's open licensing business model, which is obviously an attempt to reassure ARM's existing licensed partners and not blow up the existing ARM business prematurely. As Jane Manchun-Wong tweeted, "I wonder how the Nvidia acquisition of ARM will affect the neutrality of the ARM architecture. For example, how will that affect Apple Silicon in the future, whose processing unit is currently ARM-based, considering that Apple and Nvidia don't really have a good relationship," end quote. To which I'd say, yeah, but you don't buy a business just to immediately piss off the partners that make that business valuable in the first place. Plus, doesn't Apple have something like a perpetual ARM license? Also, it increasingly feels to me like Apple is going to go its own way in chip development and won't really need ARM in a few years' time. The fact that they weren't even looking to buy ARM themselves is what makes me think that in the first place. Thorough analysis of what this deal means comes from Patrick Moorhead at Forbes. Essentially, this is going to impact nearly every chip market segment. Quote, "The Nvidia ARM deal is not only the largest semiconductor deal by dollar volume at $40 billion, but I believe the one with the most significant impact. I think the deal fits like a glove in that ARM plays in areas that Nvidia does not or isn't that successful, while Nvidia plays in many places ARM doesn't or isn't that successful. Nvidia brings incredible capitalization to ARM, which, as we have seen since its SoftBank acquisition, ARM has increased its market presence and competitiveness. SoftBank's investment has enabled ARM's thrust into the data center, automotive, Internet of Things, and NPU markets. I believe the Nvidia adder can only make it stronger, as long as it sticks to its commitment to let ARM do what they do best, which is creating and licensing IP in a globally neutral way, which it is committing to. Software is a key part of the combined company's vision. ARM CEO Simon Segars framed it well when he told me, quote, "We're moving into a world where software doesn't just run in one place. Your application today might run in the cloud, it might run on your phone, and there might be some embedded application running on a device. But I think increasingly, and with the rollout of 5G and with some of the technologies that Jensen was just talking about, this kind of application will become spread across all of those places. Delivering that and managing that, there's a huge task to do, and it all requires a computing architecture that can scale from the tiniest sets all the way up to the biggest supercomputer, and we can address that," end quote. Quick note about the price of the deal. SoftBank paid $32 billion to acquire ARM back in 2016. So that rumored $40 billion price tag suggests a 25% return on ARM. Except for two things. As Dan Primack pointed out, SoftBank's only going to get about $33 billion back right now. The rest is tied up in retention compensation and possible earnouts. But even if you were generous and gave SoftBank credit for a 25% return in 4 years, keep in mind that over that exact same time period, the NASDAQ has returned a whopping 115%, which continues to belie the claim that Masa-san and SoftBank are some sort of investing geniuses. They can't be, right? When all you'd have to do is have bought the Triple Q's ETF and gotten a multiple better return than they did without all of the extra hassle. And actually, the smart buy would have been Nvidia itself. As Alistair Barr pointed out on Twitter, when SoftBank bought ARM in 2016, Nvidia was worth about $30 billion. Now Nvidia is valued at $300 billion, end quote.